It's funny you dropped out of school but still found yourself back in this class. What is up, guys? It is your boy Blessing back again with another market outlook. Okay, so right here, guys, we have USD CHF, the US dollar Swiss francs. So what was happening right here on the US dollar Swiss francs? The US dollar Swiss francs, we analyzed the market on the weekend, then found that the market is bearish after changing character right here on the daily time frame. So on the 4 hour time frame, we came back up to take some liquidity. It's fine. We left the supply above there. We left that 4 hour supply, but it's fine because there's no need for us to go up there because we already took out some liquidity, so the market has the potential to drop down lower. And then after taking out this liquidity, the market gave us a change of character. So as you can see right here, it pushed up, it pushed down, it pushed up, pushed down, and then pushed up again, and then that was the last push up, taking out this high as our liquidity and then giving us a change of character to the downside. So now the market is bearish. So we haven't seen a lot of movement, but we've seen a little upside movement. I'm gonna tell you why the market was moving up and not down. So as you can see right here, guys, this candlestick was on Friday when it was the event, the CPI. So this candlestick was uh, just a straight candlestick with no liquidity inside it. So the market, I wasn't surprised when the market came back up again to take out this high as our liquidity, because on the road down we don't have any liquidity, we don't have no bumps in the road, it's just a road down, a straight road down. So we need liquidity in order for the market to move down lower. So what is happening right now? The market is coming back to take out some liquidity, and it has taken out some liquidity right here on this high. So this is our liquidity high, got taken out. So right now we are seeing some 1 hour fractal shift, as you can see right here. If you can focus on the individual candlesticks, it's like this. Excuse me. Fractal, we focus on the individual candlesticks. Okay. And in swing structure, we focus on the swing. Like this, we focus on the swing itself. So on the 1 hour, we're seeing some fractal shift slash change of character. Excuse me for those ads. Uh, uh, um, I haven't paid for my trading view. Yes, so as you can see, as the market is pushing up, taking out this liquidity, another push up, and then after that we are seeing some momentum to the downside, changing the character. So now we should expect a push up again, then a retest right here to continue for the downside. But we should wait for the candlestick to close with a body, to close with the body, because if it closes with the wick, that I'll consider that as a liquidity grab, as you can see right here. For example, as you can see right here, let me just zoom in. Yeah. So look at this, guys. So the market was pushing up, down, up. So that was the last push up. So then when it drops down here, you're expecting that this is a change of character low, right? But you wait for the 1 hour candlestick to close, and then what happens? It closed with a wick. So as you can see, that was a liquidity grab with no change of currencies. Okay, so that's how I spot the liquidity grab. Um, the market closes with wicks on most of the times. On most of the times, closes with a wick. And I won't be surprised right here if the market continues to push up again, because on the 4 hour time frame, the change of character is very low. It's right here. This is our 4 hour change of character. Why, guys? I'm focusing on the fractals, the candlesticks. So as you can see on the 4 hour, we have a push up, a push down, a push up, a push down, a push up. So right here, we're expecting the market to push down to break this low, giving us a change of character, then pulling back up inside the change of character, then we enter for our shorts. I'll be very potential in my shorts after that, if I see that. But right now, it's just mm, risking. I could say that you're just risking. If you could just enter here, let's say you're gonna identify this as your change of character, as I said. and then you wait for the market to pull back inside there and then drop down again. That'll be a risky trade. I could tell you that, guys. That will be a very risky trade. So if I drop down to the 15-minute time frame, you will see why I'm saying this is a change of character. So it's a little bit more clear on the 15-minute time frame. So as you can see, guys, it's a little bit more clear on the 15-minute time frame. Oh, right now we can see that no, that's not the change of character on the 15-minute time frame. This is our change of character because this high right here never broke this high. So this was the last high and this was the last low. So the market right now is breaking the low. So on the 15-minute time frame, it closed with a body candlestick. And if you can see right here, we have some of ascending channel, whatever you want to call it, but something like this, as you can see. So guys, you all know this channel, that after this channel we expect a breaker structure, a change of character, then a retest, then a sell down. For the trend line trader, the trend line trader is simply waiting for a trend line breakout. As you can see right here, we have a trend line, and as you can see, the market broke out the trend line and then it pulls back inside the trend line, and then on top again we have another trend line. So it's just something like this, guys. It's just something like this. You see, it's something like this, guys. As you can see right here, that the market broke out of the trend line. So now we are expecting a pullback inside the trend line, touching the trend line, and then continue, and then to give us our sales again. I'm still looking for sales on this chip, brother. Excuse me for my language, but yeah. Why am I looking for sales, guys? Get this. The market is clearly bearish because we saw the change of character on the daily time frame. Remember, so right here we have our supply that I expect the market to push up to, and then we could look for our sales. Maybe if I do get like a fractal shift on the 15 minutes time frame to the downside, then I will be more confident to enter for my sales. Yeah, and in addition, guys, in addition, hmm nah, but this thing should sell because right here, look at this, guys. We also have a supply right here. I'm not sure if it's a 1 hour supply or a 4 hour supply, but I think it's a 4 hour supply. As you can see, it's been tapped, and as soon as we tapped it for, oh god, this is so beautiful. Look, now it's beautiful. Now it's beautiful. On a 15 minute time frame, it looks beautiful. Look at this, a liquidity grab, a tap inside the supply, then a change of character. A change of character right here. So guys, yeah, this thing should sell. It should sell, guys. USD CHF should sell. Should sell. And again, guys, again, for all you trendline traders, but I do not trade the trendline. I just use it for like more confluence. I just use the trendline for more confluence that the market really needs to sell down. So as you can see, we have like a flag or whatever you want to call it, right? A rising flag, whatever you want to call it. But it is a trend line. So guys, yeah, the market is clearly bearish on the USD CHF. And why do I want the market to be bearish on USD CHF? I do not want it. It's just that's, and if you can see right here on the dollar, after giving us a change of character, after change of character, what do we expect, guys? A pullback. So I mark my liquidity lows that the market should take out. Maybe just take out all these liquidity lows, including this one, and then after that maybe could tap right here in this area of demand, on this 4 hour demand that we have. So that is what I'm expecting from the dollar to do, which should push USD CHF to the downside. when we are giving out that retest. um, yeah guys, yeah. And I want you I want to teach you something, guys, something additional about the market. I want to call it that. I want to call it. I'm gonna give it a name. It's the range. Okay, the range. So the market. Let's say the market is trending like this. So the market is clearly on a bullish trend, and then the market pushes up high. Now get me, guys. Listen, listen, listen carefully. When I say listen carefully, listen carefully. From this low to this high, it may be the same range or the same length from this low to this high again. So as you can see right here, it may be the same length as this one. See? So why do I say that? Look at this, guys. For an example, let's just start here. Here. Just start here. I'm gonna mark this low to this high and see that the market almost does the same move once it breaks out, once it's ready for a continuation. It almost does the same move. Look at this, guys. It was almost the same. As you can see, if I can stretch out this thing right here, look at this. The market really came back to that last what should I call it, the last point. The I don't know how to explain it, but yeah, do you guys get what I'm saying? I should do some notes on this thing. Again, for an example, right here, I'm gonna mark from this high to this low. So as you can see, this is a pullback and a continuation. Look at this. The move and the continuation are almost always the same range or the same amount, the same length. Okay, look at this. Almost the same, guys. See, almost the same. As you can see, almost the same. See? Hmm. Where else? Where else? Where else? Where else? Where else? Maybe let's take from this. Oh, sorry, guys. Sorry for that. I'm very sorry. Sometimes my phone crashes out. See, I never entered the clock. Stupid phone. Yes, reload. Okay. Again, I'm gonna take my rectangular just to mark from that high to this low right here. And look at this. Okay, now my phone is lagging because okay, stupid phone. Sorry guys, I'm sorry. My phone's lagging right now. I don't know why. Okay, as you can see, guys, it's almost the same range every time we do a move. See? Now, why am I teaching you this? Let's just mark from that high to this low. Let's just mark from that high to that low. Okay. So, I'm teaching you that if the market decides to drop down from there, from excuse me, from this point, if it decides to drop down and do not break that point again, maybe let's say it drops down, it drops down, it drops down until it comes here, and then you're thinking I should go out of my orders, you know, Just think of this. Just think of what I'm teaching you right now. That the market could do the same range, the same length as the sale before. So I want you to be sure, I want to assure you that this low has to be taken out. That is what I want to assure to you guys. This low has to be taken out. We need the third breaker structure right there, because we have the first one, the second one, now we need the third one. So something like that. What else should I analyze for you guys? USD, let me see. Again, on Euro USD, I'm still looking for sales, but I'm looking for like a deeper retracement than this one. So as you can see, the market is pushing up a little, yeah. To maybe take out this liquidity high and this and that liquidity high, and then start selling down again. So guys, again, guys, if you look at for your trend line traders, I do not trade a trend line though. For your trend line traders, if you can check here, we have a trend line. Again, I'm doing this for the trend line traders, guys. We have a trend line, if you can check right here, guys. So as you can see, but I would love to remove this because I do not use it. I'm just putting it in addition for the trendline traders who maybe are still finding it hard to understand this SMC strategy. And excuse me for my English if I'm breaking down, but guys, I'm not good at English. I just want to accommodate everyone here, or else I could just speak my language and get many audience from my language inside my channel right here. But I'm not looking for that. I want the whole world to win, guys. I want the whole world to win. So as you can see, guys, right here, what do we have? We have a change of character to the downside, as you can see. Okay, why do I want the change of character, guys? Because clearly it's almost like the USD CHF, but a bit different though. So we have the first break of structure, the second break of structure. So now we are looking for the third break of structure to take out this liquidity low. Which liquidity low? That one. You see? This one. This liquidity low, guys. This one right here. Yes. That is what I'm looking for. And if I'm gonna use uh, the strategy I was teaching you just now, that the range is almost the same amount or almost the same length. So I'm gonna mark from the high to this low. Excuse me for my notification. Maybe let's say the market now is ready to go down. Excuse me, to go down low. Or I want to take this thing. Don't know how I'm gonna take it. Okay, let's say the market is ready to go down low from maybe this liquidity high or that liquidity high. Let's just say this liquidity high, the overall liquidity high. Look at this. It's almost the same length, guys, to this liquidity low. So I'm very sure that the market should tank down. Oh my God, guys, you should look at this strategy that I'm teaching you, guys. It's so beautiful and almost happening every time. It should tank down to give us those beautiful sales. And that is the reason why I wanna refund my account and answer for my shorts right there, because I didn't get a chance. I didn't get a chance to hold for my shorts from that high, from right here, because that is where I got in for my shorts last week. And then the market tanked down, tanked down, tanked down. That I thought that the market could just reverse with me, maybe grab this liquidity high, but I was wrong. It decided to do the 4-hour change of character and then a pullback inside the change of character. A little pullback. That was a little pullback, bro. That was a little pullback, though. I'm looking for a bigger one, a more clear one, as you can see, guys. So the market continued to tank down, tank down, tank down, tank down, and then gave us a change of character to the upside. So now the market is clearly just trading bullish. Excuse me. So now the market is clearly just trading bullish, as you can see. Push up, push down, push up, push down. So now we're expecting the next push up, and then maybe a retracement, and then the next push up to maybe take out this liquidity high, and then maybe we could get the change of character, and then we could enter for more shorts, guys. Do not sell now. Wait. You should wait, guys. We just wait for the change of character, guys. Simple as that. So if I take my PVD, my premium versus discount, so and then place it on that high to this low, I see that the market hasn't tapped inside my 0.5 fib. I need a tap inside the 0.5 fib and enter the premium to maybe take out that liquidity high or this one. And then I would need a change of character again. So confluence number one, market structure. What is the market structure doing? It's bearish after giving us a change of character right here. Supply and demand. What do I have? I have supply because clearly right here, guys, from this buy up to the sell down, it's a supply zone. So as you can see right now, the market is in supply. So market structure check, supply and demand check, the PVD dang, because we haven't entered inside the 0.5 fib and entered above the 0.5 fib to tap inside the premium, and then we could look for our shorts. Liquidity, I do not have liquidity yet. The market hasn't taken out liquidity. So where is my liquidity? Right here, right here. If I get my liquidity, I'll be waiting for the fifth confluence, guys, the change of character. That is where I get in for my shorts. Maybe let's say we take out this liquidity and then pull back and then decide to go back up again and take out that liquidity, and then we could look for our shorts once the market decides to break one of these lows. This one, this one, this one, this one. But if it breaks it now, I won't be happy for my shorts. I won't get in because I don't have the PVD. I don't have liquidity. So as you can see, right, guys, that is where I'll enter for my shorts and scaling. Maybe I will go to the 1 hour time frame once the market pulls back inside that supply that will be created after the change of character. Then I'll go back to the 1 hour time frame because this is the 4 hour time frame. I'll go to the 1 hour time frame and then wait for a 1 hour change of character to the downside, because the market once it pulls back up inside the change of character, that will be a bullish market inside the 1 hour time frame. And then if the 1 hour flips bearish, that'll be more confirmation that we gave us a change. It gave me a change of character on the 4 hour time frame, and now it gave me a pullback inside the 4 hour change of character. That'll be a supply zone, right? And then on the 1 hour, when it gave when it's giving me that pullback, it's pulling back bullishly, right? On a 1 hour, even on a 4 hour. On a 4 hour, I should wait for effective shift. On a 1 hour, I should find a change of character, guys. Effective shift and a change of character is almost the same thing. The difference is that the fractal structure, we are dealing with the individual candlesticks. I don't know if you get me. I'm gonna show you. I'm just gonna show you just now what is effective shift is. What's effective shift is. So right here we have fractal shift. As you can see, the candlesticks were trading like bullishly. So as you can see, push up, push down, push up, push down, push up, push down, push up, push down, push up, and then it decided to break one of those lows and then giving us a retest inside that area of supply that is created. This sell before the buy, it was the area of supply. So the market came back up, and with this candlestick, I mean, it came back up and then continued taking down. It's something like that. So if you want to look for more clear shorts, you just go to the 1 hour time frame. Once we tap inside that area of supply that is created inside the change of character, you go to the 1 hour time frame and then look for the change of character to the downside, and then you enter for your shorts once it retraces inside that 1 hour change of character again. Can you see, guys, that the change of character is in power in the strategy that I'm using? It's power to win. That is how you win, guys. I'm just gonna leave it like this so that once we get back, we could find the same thing. What else should I analyze for you guys? Maybe GBP USD. GBP USD is almost like the Euro USD, but more clearer for shorts. I could say that it's more clear for shorts. As you can see, guys, on Euro USD, I was in my shorts again. I was also in Euro USD shorts. But I also got out. Because the dollar um, didn't give me a 4 hour change of character when I was inside those shorts. So it ended up being like Euro USD, you know. Yeah. So yeah. and this demand right here at the market, it could push the market up higher because it took out this liquidity low. So if it guys, I should teach you more about this strategy, guys. If a demand or a supply takes out a liquidity high or low, it is very strong. For an example, I have an example. Look at this, guys. It is so clear. Look at this. Look at this. This supply zone took out this liquidity high. And what happened when the market came back inside that supply zone? It down, tanked down. And after taking out this liquidity, it tanked down. Then gave us like a 4 hour change of character. Let me just remove this. Again, guys, I do not trade trend lines. I use it for more confluence. So as you can see right here, it gave us a change of character to the downside and then a retest inside the change of character to enter at the 4 hour demand, excuse me, the 4 hour supply, which took out liquidity. This liquidity, which took out that liquidity. So it's so strong again. It is so strong, guys. Mm, 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 mm. And what do I mean by you should look for shorts like for entries? I mean, in the lower time frame. See, look at this, guys. It is so beautiful and clear. Oh my God. Look at the 1 hour time frame. On the 1 hour time frame, what did we have inside the change of character? So this was our change of character. And then the market pulls back. Look at this, guys. This is the change of character low, right? So the market breaks that low and then pulls back. Pulling back how? In the 1 hour time frame. Bullishly, guys. Look at this. A push up, a push down, a push up, a push down. Sorry for my notification. A push up, and then the last push up, and then we had a push down, breaking this low, giving us a change of character on the 1 hour time frame, leaving this order block right here. So you would have got you would have gotten a sweet, beautiful entry, bro. Beautiful entry. Look at this entry. Oh my God. Putting your stop loss is so small. Look at this bar. Maybe you could put the stop loss above this liquidity high because it could get taken out. You see, and maybe if you were targeting like a small profit or little profit, you could have targeted like this is like a 1 2 3 risk to reward, guys. Clear, beautiful. But if you want to hold, you could be holding and you could be in such deep profits. Look at this. Look at this, guys. Excuse me. We could have been in such deep profits right now, guys. And the market is pulling back just to give us more sales. Why? Because the market, after breaking the structure, it left liquidity highs. Let me go back to the 4 hour time frame so that I could mark them and they could be a little bit clear. Guys, you'll need to understand this again. Every high, every low is liquidity. This is liquidity. This is liquidity. This is liquidity. This is liquidity. So right now we have liquidity number one, liquidity number two, and liquidity number three. This one. Maybe liquidity number four. Excuse me, guys. I'm full. I was eating, so obviously I'm gonna. What do you call a bottle in English? Is it barking? I don't know. Something like that, though. Something like that. So when I put my Fibonacci retracement from that high to this low, um, okay, this Fibonacci retracement is invalid because we have a breaker structure right here. So what do I need? I need to mark it from this high to this low right here. So as you can see, guys, the market needs to take a, let's just remove this liquidity high because it's uh, it's very low it's very low from this breaker structure, so the market might just come back up and take out all these liquidity highs to tap inside this area of supply, because overall this is an area of supply that needs to be tapped. This area of supply right here, it needs to be tapped. I'm sorry for that. Yeah, this area of supply needs to be tapped. And you might be thinking that we already tapped this area of supply. Look at this. We got out with this candlestick right here, and then these two tapped inside. Tapped inside. Um, if I can go to the daily, maybe it could be clear. I don't know. Ah, look at this. On the daily, it's so clear, guys. It is so clear on the daily, guys. It's a simple, beautiful doji candlestick. Let's just mark the whole candlestick as our area of supply. It hasn't been tapped out. No candlestick inside the daily has tapped out this area of supply. Look at this, guys. You see, this one pushes out of the supply. Look at the next one. Did it tap in? No. The next one, did it tap in? No. So we're expecting for the market to push up, take out this liquidity high, and then tap. Oh my God, it's more clear on the daily. So we could just remove this and leave this one. It's more clear on the daily, and remove this one also. I don't need it. I also need. I just need one, because on the daily it's clear that I need to take out this liquidity high and then tap inside this area of supply and then push down lower again, and then we could scale inside there. Okay guys, I think this video is too long. What else could I analyze for you guys? What else? mm, I was analyzing NZD USD the other day, right? Yep, I was. Yeah. So it's clear on the NZD USD. After taking out this liquidity and tap inside this area of supply, we are waiting for a change of currency and then pulling back inside the PVD. We have all the confluences on NZD USD. We're just waiting for one more confluence after this break of structure. So we expect a pullback, right? This pullback right here, guys, it's not clear. We need a more clear pullback. So as you can see right, we have a push down and then a pullback inside that um, area of supply. So it's so beautiful. The market is inside PVD right now, and we could expect the market to tank down lower again to take out all these liquidity lows, all these liquidity lows. So we could, guys, do not get me wrong. This supply could hold the market down lower. Yes, it could. And the market could continue to push up higher to take out that liquidity high and tap inside that supply above, because that supply is more clear that it's a 4-hour order block. What is an order block? Guys, an order block is simply an individual candlestick. It's either selling or buying. And then the next candlestick, it should all the next candlesticks, they should like really push down lower. Where should I find an order block for you guys? I'm just looking for an order block for you guys so that you guys can understand what is an order block. um hmm, let me see if I can go to the daily. hmm. See, just guys, for an example, the supply here, you see the supply. Okay, look at this blue candlestick right here. It's it's the only blue one, and then the next ones are red, and then sealing down, like tanking down. That's an order block, guys. And then again, this right here is also an order block on the daily time frame. This is a daily order block. This candlestick, this individual blue candlestick, and then look at the next ones. They are red, tanking down. So this is an order block. So it's something like that, guys, as you can see. Okay. something like that. So yeah, guys, this I think that's enough for today. Or if the market pushes up higher, then it will give us a break structure here, and then this low will be the change of clouds low. Thank you for watching, guys. Tune in again on the next episode, and don't forget to leave a like and subscribe, guys. Subscribe. I only need 10 subscribers for now. 10 subscriptions. 10 subscribers. Subscribe to my channel. Subscribe.